Hey LABx members, Bill Faeth here, and welcome to February's workshop, Preparing for Your Insurance Renewal. It is my distinct pleasure to have a good friend of mine and a really instrumental part of our industry, Mr. Nathan Spears, joining me today. How are you today, Nathan?
I'm doing great, man. Thanks for having me.
Yeah, sorry the weather isn't a little bit better outside. Hopefully your commute in was all right.
It was fine. Had to play it safe. My property, on the other hand, I live on the river, so
Right.
It's probably getting flooded right about now.
So I have to say I'm a little bit disappointed in you today.
Okay. How's that?
That you didn't wear the Joe Namath fur coat that I was
the fur coat.
anticipating.
Well, like I said, the fur coat is kind of like having a tag along, and you have to find a place to put it and keep up with it. So
Right.
bit of a job.
So a lot of you may or may not know Nathan. And, Nathan and I probably first met, I think maybe 10, 11 years ago, briefly when I was still an operator, right?
I solicited you at a Limo Association meeting, and I'll never forget it. We can talk about that later on.
I'm assuming I probably shot you down and was rude or something. If that's
You stared me down, but you stare most people down freaking 8 feet tall.
Oh my gosh. But yeah, we'll talk about that at the break.
Yes.
So Nathan has experience in the industry. He's worked in the industry as I did. He's been, how long have you been in the insurance world? Like 15 years?
August will be 12 years.
12 years.
Yes, sir.
So the thing that I find, Nathan and I kind of reconnected about 2 years ago in Las Vegas at the Vegas show.
Yep, in an elevator.
And one of the things that I love most about Nathan is his faith, his trustworthiness, and his honesty.
Thank you.
And that's one of the reasons, if you saw my live video this morning promoting this, that I've asked Nathan to, come here and share this information with you guys, because I've reached out to almost everybody I know in this industry. And to be very honest, Nathan was the only one that was willing to share the truth, which is in return is going to benefit you, because we share a very similar mission of wanting to help our industry.
Sure, we're telling, not selling. So.
Exactly. So I'm extremely excited to have you here. Thank you so much for our LABx members. And let's dive right in and get started. We're going to be here for probably 90 minutes to 2 hours. If you're on your first LABx workshop, we will be taking a break in the middle, and please take some notes. But once we're done, it's being recorded. It'll be uploaded into your Limo University library under LABx, and you will get the slides and the recording, and probably even find out where Nathan gets his awesome hair gel. So let's dive right in. If you guys have questions, just pop them in to the comment section here in the Limo University LABx group. I'll be monitoring questions, but I kind of want to let you know what we're going to be talking about, what we're going to cover today. We've gone through the introduction. We're going to dive into how shopping works and tell them what shopping really means. When to start preparing for your renewal, what documentation you need for your existing broker, which is different than if you're going to kind of shop and work with a new broker, right?
Somewhat, yeah.
Safety controls and your loss ratio. Number 6 and 7, I think, are for me the two most important ones up here. And then that's the Q&A on the back end with Nathan. We have people that have already submitted questions that we'll get to. And then if you have questions, just drop them into the comments and we'll get going with Nathan. So we're going to move on. We've gone through our introduction and jump into Nathan. Tell me what shopping is and how it works.
It's just like shopping for a pair of shoes or anything else. Your agent's job is to have knowledge of your operation, first and foremost, and to make sure that you're getting the best value and the appropriate coverage from an insurance carrier. So typically you have to go through a broker like me to get to that.
Right.
That's shopping.
So in shopping and kind of how it works, can we go a little bit more in depth into that?
Yeah.
So if my renewal is coming up in a month, or let's say even 3 months, and you and I don't have that fuzzy feeling with you anymore as my current broker, right? And I want to test the market. I want somebody else to shop for me.
Sure.
Can that happen?
Yeah, absolutely. You're not exclusive to any one particular agent. Now, once you do get a insurance policy in place, you've entered into a contract. But yeah, And so you want to get into kind of the preparation for
I
shopping?
I think what they don't know is if you shop to Philadelphia and you get a quote back from Philadelphia for me, then I can't go to Scott over here, another broker, and get a quote from him at the same underwriter from Philadelphia, right, or the same carrier.
Yeah, most carriers operate that way, and you hear it as, blocking the market. You'll hear people say, oh, my agent blocked the market or whatever. And that's a bit of a misnomer. It's not just some sort of competitive tactic that we employ as brokers. My job is to shop your coverage to multiple brokers.
Right.
So when I do that, yeah, I'm blocking those markets. Now, if we have a good relationship and you trust me, then, and the way I do things, by the way, not all agents do this, but I'm going to show you every option. I want you to know that I did my job.
Right.
That way there's no doubt. And then, we'll choose the option that works best for you. So, yeah, you can have multiple agents shopping for the same renewal. I really kind of discourage that, though, because of the blocking aspect. Agents are just going to be stepping on each other's toes, stumbling across one another. It's going to get too competitive. It's going to get nasty. It could get stupid. So, you've got your current agent and you've got your prospective agent. Let those guys go after the biz.
So I think one of the things that's really important to me, I kind of view my relationship with my insurance broker as my relationship with my personal business banker.
Sure.
And I think a lot of the people probably watching this workshop don't really have a intimate relationship with their insurance broker.
Right.
And your insurance is probably one of your top 5 line items on your expense on your P&L.
Sure.
Right. So I believe that you mentioned about trusting your broker. It's probably one of the most important components. One, if somebody's going to touch my money, a banker, I've got to trust that person almost as much as I trust my wife.
Right.
Right. And the same thing needs to happen with your insurance. I can tell you, I had a guy, and you know who I'm talking about, out of Louisville, Kentucky, that wrote some policies for me, and I got taken advantage of because I didn't know, and I thought I could trust him, but ultimately I couldn't. And I think he still writes today. So building that relationship and really kind of what I would call almost testing your broker becomes really important. I don't mean to put you on the spot. I wouldn't if you weren't the most trustworthy guy in this industry. I can't tell you what to ask or how to build that trust. I think a lot of that's just through traditional relationship building.
Absolutely.
But Nathan has to go to the carrier and the underwriters and sell for you.
Correct.
Right? So if you're not unilaterally on the same page, just like your personal banker, and you're trying to get a $500,000 line of credit or a $100,000 line of credit, has to sell that to the board of directors or the finance committee to approve it, right? Nathan and I are going to battle together, right? And if he's just worried about his commission and he doesn't have my best interest at heart, then you've probably got the wrong broker.
I tell people all the time, I'm a dog, but I'm your dog.
Right.
So, we want the old-fashioned romance. I want that relationship with my clients, and I also want my clients to be successful. I don't want to hear them complain about their insurance premiums. I want them making so much money that it doesn't matter.
Right.
And if you trust me, I'm doing my job. I want the best for you. If you get into some claims activity, then that's where things can get hairy, and that's where we're going to need to be communicating more each step of the way. As far as you shopping me as your broker, that's your prerogative. I'm not going to get my feelings hurt. In fact, just let me know that you intend to do it, and I welcome that competition. You're just going to find out how good I am at what I do.
Right. I think, and I'm going to get Paul Covey, I'm going to get to your question. That's a great question. I'll get to that in just a second. I believe, and if you don't have 100% trust in your broker, you should shop them.
Yeah.
And there should be competition, inside of that.
Sure.
I wish I would have known you when I was an operator. And we were just having that discussion, even in some of my other businesses, how difficult it is in the insurance game. It's not just the limo business. But the one thing that I think is really compelling is the operators need to understand what you just said. Your reputation there's only 8,000 or some odd customers in North America, which means there's probably 6,000 or 7,000 that you can write for, and there's probably really only 500 or 600 or 1,000 that you may really want to work with that qualify, right?
Sure.
So the industry is extremely small. So if you take advantage of your customers, they're going to find out you're going to lose your book of business really quickly.
Yeah, reputation is huge. And, none of us are perfect. We're all going to make mistakes, but the expectation is absolute perfection. That's the expectation on your side of the fence, so I carry that with me as well. And I was a chauffeur as well, by the way, so
right.
I know what it's like to put on the black suit and sit there waiting on a run.
You get it.
Yeah.
So Paul Covey has a great question, and I think, so are you saying that if we want to change agents, we need to be matter of fact and cut that relationship prior to the shopping activities with a new agent?
That's a great question. I wouldn't suggest cutting the relationship unless you just absolutely know.
Have lost all trust.
Yeah, you've lost all trust. You're basically saying goodbye. You're letting them know that they don't need to waste their time. I would actually appreciate that. I'd hate to kill myself working on your renewal only to discover that you
it's
don't
kind
want
of
to
like
work with me.
the sales adage, right? Give me a yes or no. Don't give me a maybe.
That's right. But if you have a good relationship with that agent, they're doing a good job for you, or decent job, whatever. Just give them a heads up. Let them know that you're probably going to shop, because in doing so, you're going to motivate that agent. If they want to keep your business and they care to keep your business, then they're going to bend over backwards. They're probably going to stop what they're doing right then and there.
Right.
And work on that renewal.
So I think that's a great question, Paul, and some things. I mean, I know that I think I said in my live broadcast to the group this morning, I think I did insurance renewals, 4 renewals, and I feel like I got taken advantage of 3 times out of those, kind of 5 instances.
Yeah.
I want to make it really clear that Nathan is my guy. And what I mean by that is he's the guy that I trust the most in this industry. Nathan doesn't have to be your guy. I would recommend him. I give him my highest recommendation. We just started the process of me becoming a client of yours,
sure.
right?
Yeah.
And my GNL and my E&O and my workers' comp and all that type of stuff. Because of my trust, I put my money where my mouth is. There's plenty of other, I don't want you to think that it's a corrupt, negative, bad industry and Nathan's the only guy. That's not the point of this. There's plenty of other great, brokers that are out there. And I think it starts with your strongest relationships in this industry. And it could be right here in the LABx group, could be in the Limo U members only group, could be your trusted 3 or 4 or 5 affiliates. The one thing I would advise against, if you're looking to make a change, like Paul's asking, one, don't just X out your existing broker. Give them an opportunity to retain your business and re-earn your trust back. But 2, if you're going to go shop, before you shop, get at least 3 to 5 recommendations from people. And don't just say, hey, Nathan's great, or Mike's great, or Bill's great, or whoever that is. Ask them why. What is your existing broker doing wrong in your eyes? And if they can answer those questions positively, then potentially look at that new broker. Would you agree with that?
Absolutely. Qualify them. You don't have to have a college degree to become an insurance broker. You have to be 18 years old and pass a test. Just because you have the license doesn't mean you're good at what you do. Just because you've got a $5 million book of, contractor business doesn't mean that you turn and burn on a daily basis in the livery industry. There are a lot of little nuances that come with that industry that you absorb when it's what you do all day, every day. So, yeah, those are all good points. Nothing to add to that.
Great question, Paul. If you guys have questions, please leave
Paul.
a comment just like Paul did in the Facebook group, and we will get to your comments. So let's move on to the next question.
Yeah.
I love the guy in the starting blocks. I wish I was ripped like that guy. I mean, you're kind of solid. I'm not. I'm a little pudgy. But when do I start preparing for my next renewal? Do I do that a week in advance, 2 weeks in advance? What do I do?
Yeah, so one of the biggest issues that I see in the industry with operators and oftentimes with brokers is waiting to the last minute to prepare. So I put it to you like this. If you've had claims activity, accidents, so forth, over the last 12 to 24 months, I would suggest you start preparing 60 to 90 days in advance of that renewal. You may have had claims that paid out that you know nothing about. You may have no idea that the little fender bender that happened 6 months ago paid out $15K for bodily injury. It's not like the claims adjuster is going to double back and fill you in and let you know what it paid out ultimately. So, you could be in for some surprises there if you've had claims. If you've not had any claims and you're squeaky clean, you're relatively happy with your broker, you're relatively happy with your pricing, 30 days, bring it up, 30 days, talk to your agent. Yeah.
And some carriers won't really start 90 days in advance. Is that correct?
Well, that is true. I mean, it's actually become more of an expectation than what it used to be, but you typically can't get a quote from a carrier that's valid more than 30 days prior to your renewal.
So they would put an expiration date on a quote to say this is only valid for the next 30 days.
It's quite possible they won't even release the quote. But again, that's going to kind of come down to the broker and their relationship with their underwriters. You have brokers that yell and scream at people, and then you have brokers like me that create trust with the underwriters and typically able to get information in advance or just in general.
And what is the reason that, a carrier or an underwriter wouldn't want to, give a quote 90 days in advance? Is that because of the risk for, an accident that can happen during that time period?
Sure. You could go out and have a whopper, after that quote is released. So they're really sticking their necks out by giving it to you 30 days in advance, let alone 90.
Right.
So it doesn't mean you can't work it that far in advance. Doesn't mean that I can't submit your information that far in advance. But what it does mean is I'm probably going to have to give them updated loss runs and claims history and so on and so forth, maybe even MVRs when it comes down to the nitty gritty. Yes, we like your price. Yes, we want the coverage. Is this quote still valid?
So really this kind of ties into the next two about when do you start preparing, but what do you do to prepare to make it easier for you to go to battle, with the carriers and the underwriters. So I think one of the purposes of this question is Nathan, how do I avoid coming down to the 11th hour? I may even see it more than you because people come to me and they're like, holy shit, I've got my Philadelphia's going up 45% or Lancer's going up 45%, and I've got 2 days to make a decision and nobody else will cover me. How does the timing of starting that process, how can we avoid coming down to the 11th hour?
Like I said, start the process, 60 to 90 days out if you have any insecurity whatsoever. If you feel secure, you've not had claims, you got a great agent that's responsive, that you trust, that does this all day, every day, maybe 30 days out, they're probably going to have your renewal 30 days out anyway. Right. You might not know it, but they've got it. And if they don't have it, they've got a carrier underwriter beating them up, asking them, get me the info, I need to release this quote.
So what I'm hearing Nathan say is there's really no reason for an operator to come down to the 11th hour and just be getting delivered quotes within the last week or even 48 hours, which I see happen all too long. And that's really one of the biggest things for me, and my motivation of bringing Nathan in is for you guys to really understand kind of how that process works. Because what I heard Nathan just say is really the underwriters are already working on that about 30 days out, or the carrier, and then the additional underwriters pounding them to get all the information. They want to get it done, right? So, not putting words into your mouth, but what I'm hearing is from if I'm an operator 10 years ago, is that the brokers are playing games with me in some form or fashion. At least the ones that couple of bad experiences I had, and they're holding me hostage till the end, and that should not be standard practice. And that can cost you thousands to tens of thousands of dollars, and then you don't have time for another broker to come in when you've got that quote in the last week or the last 3 or 4 days to find somebody new and to go and make sure that they were shopped to every single market.
That's right.
So I think part of this ties into it all goes back to that trust factor that we talked about, but the transparency and I think knowing the right questions to ask your broker and when to ask them. So if you're saying to, 60, 90 days out to start the shopping process as we prepare, what can I ask my broker and what would it, and I'm putting you on the spot now. Hey Nathan, this is Bill. I'm 60 days out from my renewal. What's today? February 20th, let's say May 20th or whatever.
Yeah.
April 20th.
Yeah.
I want you to shop every market that'll cover me. And I want to know every single company that you're contacting. Would you deliver that to your customers?
Absolutely. And off the cuff, I never get calls like that really. But if I did off the cuff, I already know that you're eager to get a good deal, that I better watch my back and do my job.
Well, I didn't mean to imply that. I just want to know, because a lot of my members call me and say, I only got one quote. Yeah. And they say they shopped everybody, but there's only one company that's willing to write me. So as I learn more about this, I kind of want to call BS on that from the broker, right? Yeah. Is there really only one company that's willing to underwrite? I can maybe understand that in New York. I can maybe understand that in Michigan, which has a lot of issues, right? But if I'm in some a little bit more liberal states like we're in here, I mean, Philadelphia can't write me, Lancer can't write me, National Indemnity, can't write me. I mean, what's going on here? How do I get a checks and balances with my broker is what I'm really asking.
Got to have a conversation. Got to have a convicting, informed conversation. I don't want you to just say, okay, Nathan, I trust you. I want that trust. But what I really prefer is to have a business conversation so I can empower you. So you're making a business decision and you're not just saying, okay, Nathan, whatever you say, which is, by the way, what most clients do. Every operator is similar. Every operator is a little bit different. Depending on your model, your operation. There's a difference between somebody that's doing straight retail versus the guys that's doing a mix of retail, corporate, airport.
Hold on, I want to stop you there. Yeah. Don't mean to kind of jump in and cut you off on your train of thought. Yeah. Should that make a difference to the operator? Your book of business, if you're like more focused on retail, or if you're all retail and I'm a corporate company at Grand Avenue, is that going to be harder for you to be able to sell for me on the relationships?
That's kind of what I was getting at. So the obvious example, if you're running a party bus, I don't care if you've got 5 sedans and SUVs and this one party bus. This one party bus is potentially going to limit the markets that we can go to.
Right.
Are you a new venture? Have you only been in business for 1 year? Have you been in business for 20 years? So many different moving parts that go into whether or not you're going to fit what we call a carrier's appetite.
Is that party bus any perimeter seating vehicle, or is that any perimeter seating vehicle over 15 passengers, or does it have to have a pole? What constitutes the party bus from an underwriter standpoint? Yeah,
so a few years ago, when the carrier started really cracking down on party buses, people tried to start using different verbiage. It's not a party bus.
It's a limo bus.
It's a limo bus, right? Yeah. It's a Sprinter. And true enough. But to us, it's pretty much a party bus. If it's more conservative, you don't have the poles, you don't have all the crazy lights, which most of the time we're not looking at anyway, quite honestly. Unless it's on your website. That's another thing. Right. We could get into that. But at any rate, you can't get up and stand straight up and walk around and dance and party in a stretch Chrysler 300. Right. But you can do that in a Sprinter. And that's the big risk. You're typically not wearing seatbelts. You can stand up. The driver hits the brakes. You go flying. So it's a party bus.
So a Sprinter, regardless of who built it, with a J seat configuration or a double J seat or a J seat with 2 captain's chairs is going to be constituted as a party bus regardless.
It is. It's not going to be as scary to the underwriter as, an E350 or something that's got a bigger
40 passenger Freightliner with double J's and 4 bars and everything in it.
Exactly. Yeah.
Okay, cool. That's really good stuff. I really appreciate that. So let's, if you guys have any questions, just drop them down into the Facebook comments. John says Michigan has the best policies. All right. So now kind of when I start preparing, now we want to get into what documentation do I need for you, my existing broker? What should my renewal is coming up in 60 days. I'm getting ready to make that call to you and say, hey, Nathan, I want to know every place you're shopping. And by the way, I've already sent you this Dropbox file or Google Sheets or whatever it is. What do I need to prepare and what should I be sending you?
I love that. Nobody ever does it. They typically wait for me to reach out to them, and that's fine. But what you're going to need to shop your renewal is an updated list of your drivers. Who can we get rid of? Are we missing anybody? Did you go out and hire somebody and failed to tell me?
Mm-hmm.
And underwriters hang their hat on driver profiles big time. For newer ventures, it's practically the only underwriting information that we really have to go on is what do your drivers look like? Updated values for your equipment. So you've got a fleet of, however many vehicles. Well, they've depreciated in value over the last 12 months. What is that new stated value? Because that's going to impact your comp and collision premium. That $55,000 Suburban that you bought a year and a half ago, today it's worth $35,000. Well, that alone could save you about $200, $300 a year for that coverage. Something else that we want to know is, have you had any changes in your operation? Are you a luxury sedan and SUV operator who's about to go out and purchase a tricked out party bus and you're going to do it 2 months from now? Well, I need to know this in advance so I can contemplate that, put you with a carrier that's going to be able to maneuver around that change. Otherwise, we're searching for a new carrier midterm, and it happens, and it's what we do, but you want to try to avoid that. Are you a heavy retail operator that's now you're going to operate shuttle buses to provide employee transportation around the hospitals over here in Nashville? That's a little different. I think Michael Toledo Birmingham does some of that.
Right.
So these are things that we need to know. Have you implemented PACS, chauffeur training, or telematics, GPS tracking, any kind of safety controls that I didn't know about last year that you didn't do last year? That can have an impact on premium, perhaps more in spirit than in actual line item premium, but it shows an underwriter that you're putting forth the effort to mitigate those losses.
So basically anything that's changed from the last time that you renewed, you need to know about. You brought up something that I never really considered. I'm a sedan and SUV guy, and I'm renewing in 60 days. We get the quote, everything's great. And I didn't tell you that I'm thinking about getting in the party bus business. And then all of a sudden, hey, Nathan, I forgot to tell you, but I've got, an ECB 40-passenger party bus and a Gretsch party bus, being delivered in 2 weeks.
Right.
Can you add that to, my policy?
Right.
What happens, because I did not give you the heads up, we've renewed with whoever, let's just say Lancer, and they come back and say, you know what, Bill or Nathan, we can't add those buses to Bill's policy. Do we have to get a whole new underwriter, or can I get a separate policy with Philadelphia or whoever would write that? How does that work? And what's the issue with me not telling you up front? What am I looking at from a ramification standpoint, potentially?
Okay, all right, many layers to that onion. Yes, we may very well have to remarket your account elsewhere.
The whole thing.
The whole thing. If the carrier that we renewed with, they don't have the appetite for the party bus or the mini coach that, has a seating capacity.
Or motor coaches.
Or motor coaches, especially. If they don't write a 5 mil limit, they don't have the appetite to write the underlying liability for those types of units, then we're going to be shopping midterm. We're going to be doing this all over again. But that's what we do. It's best to let us know in advance. I just went through a situation just like that with one of my favorite clients out of Colorado. They got into the mini coach business. And even I myself in the process discovered wow, this market has really tightened up. So something that I thought might take a week to pull off ended up taking 4 or 5 weeks to pull off. Ultimately, though, fortunately, not only did we pull it off, we actually ended up saving them money on their original fleet by switching carriers. And I had nothing to do with that. It was pure luck on my part, but I got to look like a rock star and help my client.
But if
I'm so happy they're paying my way to LCT.
Right, nice. But if I take delivery of that vehicle, and then I let you know, or when it's leaving California and it's going to be here in Colorado in 2 days, then that vehicle's sitting and I'm paying the payment on it uninsured, for 4 to 5 weeks.
That's correct. And,
So how can the operator mitigate that potential occurrence? If, let's say we're 6 months in, I renewed 6 months ago. Hey, Nathan, I'm thinking about buying a Gretsch party bus, a GM 40 passenger, Freightliner. It's $180,000, yada, yada, yada. Can you go and make sure that Lancer is going to write this for me before I sign the purchase agreement?
That's a beautiful bus, by the way. But that's absolutely the way you want to handle it. I love my clients that inform me so that I can inform them in kind. I love that partnership relationship. I love that. Yeah, you need to be preemptive about it and let your agent know what you're thinking about doing.
Cool. So on this slide here, we have vehicle schedule. The stated value is as they depreciate, the driver schedule, name, date of birth, driver's license number, employment start date. What if I'm in the DOT side? Do you need anything of like my driver qualification files or anything like that? Are the underwriters interested in any of that type of stuff?
The larger the risk, especially if there's some hair on it, you've had some losses, then it might help us to make an underwriter more comfortable. If you're DOT regulated, then theoretically you have driver files and you have safety controls in place simply to be DOT compliant. As an agent, I actually appreciate and rely on that heavily.
Right.
We're not going to go walk you through an application today, but sometimes my answer about training and drivers is per DOT.
Right.
That's going to set that underwriter at ease.
So if I'm putting together my documentation, and this is kind of all updated stuff, I had, let's say, PACS previously. Do I submit PACS again just to make sure that because you might shop it to a different underwriter, right? So that whole package of my driver training, I use PAC chauffeur training, and I have continuing education. Yes. Which is important, right? So if I only do it once at the time of hire, not as valuable as every 6 months we retrain, correct?
Train and retrain.
So that policy, that procedure needs to be in your packet, let's say. But what if I incorporate Smith system defensive driving? You definitely want to have that, correct?
Absolutely.
But here's what I want them to understand. Let's say we had Smith system before, we had PACS before. Don't just submit what's right here. Submit the entire packet again, because he may go to Philadelphia and he's never shopped you to Philadelphia before because you got such a great rate out of Lancer that first year and it went to Lancer and National Indemnity or whatever it is, right? To where you may have somebody new in the mix that is in his staple of carriers that you can shop to, right? So you kind of need that whole package. Agree?
Yeah, I mean, I would rather have too much information than too little. But, I'm not going to hesitate to reach out to you and ask you questions as well and have that conversation.
What percentage of your clients are actually putting something together proactively like that for you?
Almost none of them. I think for the most part, I'm touching my clients enough that I kind of know what's going on. So it's probably not that necessary for me. I'm more boutique. That's not to suggest that I don't have a lot of clients. I do, from coast to coast, sometimes too many perhaps. But at any rate, I'm always communicating with clients, and I love having that relationship where I become more of not just an advocate, but a counselor to you as well. I want you to succeed. I want you to make tons of money. I want to be involved in that process if possible. So, most of my clients, no, they're not really putting forth a lot of information. They're just kind of relying on me, and they respond to that, and it works fine.
So my perception is that if I don't give you, who is really my sales agent, right, trying to get me the best deal with all the carriers that you're shopping to, if I don't arm you with that collateral, that's like you being my sales rep and not giving you any sales training. You don't know my value proposition about my company. You don't know my mission statement. I'm not giving you, 6 bullets, in the chamber. You might have one based on, the information that you've gathered through our, passive relationship. So my recommendation to you guys is your job should be to make his job as easy as possible.
Sure.
I don't see this in reverse. So I think putting that packet together, putting a PDF, having your defensive driving components in there, your processes, your continuing education, your PAC chauffeur training, your MVR reports, any new drivers that you've added or removed off of those components. You have new affiliates that you're planning on bringing on, your new vehicle purchases. All of these components that kind of go into your quality control. If you have the sales deck, not applicable to this, but you see that whole sales deck isn't about your vehicles. It's about quality control and about your process and logistics. Take it from a guy. We were talking about this before we got on here. So not applicable to this part of the conversation. My Glow Golf business, literally I'm paying 4 times more for insurance because I'm getting classified as freaking Six Flags in the family entertainment business as opposed to retail. And I'm not even close to being that. So instead of, my 78 locations around the country costing me, $800,000, I'm paying like close to $2.5 million, on that. And that same thing can happen to you if you've got 10 cars and you're 40,000 or 50,000 or 60,000, whatever you're spending, and you don't arm him with this information, you could be saving 5-10%. I mean, think about that $4,000, that $5,000 that goes straight to your bottom line. So all I'm saying is prepare, reach out to Nathan, reach out to me, and we'll help you put that packet together to give to your existing broker.
Sure.
And then as we click over, it's really the same thing, but there's also different preparations that have to happen when you go to a new broker, right?
Yeah.
So if I come to you, we've never done business where I just started Bill's Limo a couple years ago. I'm in Orlando, Florida. You don't know anything about me. I've got 15 vehicles. He knows nothing about you. Now what do you need?
Speaking of Orlando, hello to Den Katkov, who I just wrote down there in Orlando. Thank you very much. So it's essentially the same as any renewal. However, when it's a new broker, they're going to need all your company information, they need to become familiar with your operation first and foremost. And they can probably tell a lot by looking at your website, which a good broker is going to do that. A good underwriter is going to do that too. It's one of the first things they're going to do.
So be careful of having the vehicles that you're farming out that you don't actually own. And especially if you're in the retail side of the business, if you own a party bus with a pole in it, don't put a picture up there of a bus without a pole. And if you own buses without poles, right, but you're farming to companies that have poles, be really careful and be honest with your broker and your underwriter, because it could come back to bite you when you have one of those occurrences that I would classify as an accident, right?
Yeah, on the website thing, I mean, we know you guys will rent somebody a Ferris wheel if they'll pay you money for it. But when you start blasting, I've got this equipment, I've got that equipment, because you can farm it out. We understand that. Underwriters understand that as well. But if you carry a 5 mil limit, or even if you don't, you have a DOT filing, that obligates the insurance carrier to a lot more exposure, if you will. And if you're advertising a bunch of equipment that you don't actually own or have, they're going to be uncomfortable with that. They're going to say, well, where is this equipment? Why are they advertising a 35-passenger Tiffany when we're just sitting here quoting 5 sedans? So watch out for that. I've had plenty of clients where I've had to tell them, hey, get this off your website.
Happens all the time, doesn't it?
Well, it happens.
So in that documentation, sorry, I had to make a quick Carrie Underwood change. My jacket was annoying me a little bit. In that documentation, is there anything different based on what we talked about, whether it's the defensive driving, the chauffeur training, anything like that that you would need that would be different, coming in? I guess you would need them to pull loss runs from their existing provider, right?
Yeah, we'll get into that second. But first, I need to know your story. What is your story? How many years have you been in business? I've got to know everything from scratch, all the information. But it should be easy. You should have this information on file. You should know what equipment you're operating. You should know who your drivers are, when you hire them, and so forth. So you're just going to essentially give the new broker the same thing you're going to give the existing broker.
Does previous business experience play a role in that?
It's huge. It's huge. I just got a quote released last night for a Georgia operator who's been in business for 1 year. And he knows enough to realize, okay, I've been in business a year. I didn't have any claims. I'm going to qualify for all these carriers now, and I'm going to get a better rate. Well, maybe not. Northland Insurance, they'll look at you if you've got 1 year prior coverage, but the caveat is all of your drivers must have at least 2 years of livery experience. 1 year coverage, but 1 year experience is not going to cut it for that particular carrier. So I'm bad to get off track. Reel me back in here.
No, that's okay. So I mean, I'm wondering, like I mentioned, loss runs. What additional information? If you're the existing broker, you obviously have access to pull loss runs and that type of information. But if I'm switching to you for the first time and you're going to start shopping for me, what additional information do I need to supply to you outside of the story?
Okay, so we're going to pull back the curtain on that just a little bit. And it's a competitive thing, purely competitive. It depends on your relationship with your existing agent. If it's not good, then as your prospective new broker, I'm going to tell you, do not order the loss runs. Give me all the other information first so I can submit and market, get it out to those markets. That way the quote gets released to me. You want to do business with me, right? So you want the quote released to me.
So is that because if I call my broker and say, hey, I need my loss runs, and he's unscrupulous, he knows exactly what's going to happen, so he may go and tie up the markets before you get the opportunity?
Exactly. And so it's just an unpleasant hurdle. It's going to get nasty. It's going to get competitive potentially. So I'm going to interrupt you because you notice he's not saying that, and I know you would never, but I am. Is what he said is do not pull your loss runs. If you have a tumultuous relationship with your existing broker, you don't trust them, do not pull your loss runs from them, because that is the red flag. They know you're leaving, or they know you're going to a competitor to shop them. They're going to go and tie up. If they're unscrupulous, they're going to go and tie up all your markets. So you're locked in with them. You won't get the opportunity to use Nathan or Tom, Dick, or Harry, right? Right. And I don't blame them for trying. And ultimately, there's a way to work around that. But it just becomes somewhat unpleasant for some people. So let's save that unpleasant feeling, and I'll let you know when I want you to order the loss runs. Because, like in the state of Tennessee, for example, you asked me for your loss runs. Legally speaking, I don't have to give you those for 10 days. I've got 10 days that I can turn those around. It's kind of an ethics rule and so forth. I don't do that. But sometimes, hey, it may take a carrier 2 or 3 days to get the loss runs to me. I'm not trying to tie them up. I'm waiting. Right. Progressive Insurance right now, their turnaround time for loss run is 6 to 10 days.
Wow.
That's, out of my control.
So that's great stuff. We're going to take a couple of questions that have come in on Facebook. And then we're going to take a really quick break. This is from John in Detroit. If you pay for your damages without claiming it on insurance, is it worth not having collision? Can you just carry liability?
You can do that. And what's up, John, by the way? I know exactly who I'm talking to. You can do that. I don't recommend...
Is John a client of yours?
I wish he was.
Okay, well...
I've recently communicated with him, I think.
Nice.
If it's the same John, there's a lot of Johns.
It's who you're thinking of.
Okay, yeah, great. Great operator. So, at any rate, you can drop the comp and collision coverage if you want to. You will save money that way. Not a ton of money. The majority of the premium, John, is tied up in the liability coverage. Not the comp and collision. That would be second to the liability. Typically, unless you're operating units that are valued at $100K or more, which I don't doubt if you are.
He is for certain.
Yeah. And also I would add to that, however, if you're still running, an 07 Lincoln Town Car sedan in your market and the vehicle's worth, $2,500, it doesn't make sense to continue to carry comp and collision on that vehicle. You're going to have a $1,000 deductible. You total the car, you're only going to get $1,000, $1,500.
But if you got a $200,000 Gretsch, you probably don't want to give that up.
You want to protect that investment. You got to protect that investment. And if it's financed, you absolutely have to protect that investment. You don't have a choice in that. So
the other issue in regards to that, guys, and John, I know you're pretty heavily retail right now, but when you decide to go corporate, a lot of your contracts, if you do get contracts and you do get a large corporate account, they are going to want to see your insurance policy. And if you don't have comp and collision, they may require you to have it. So a lot of it's not just saving money. A lot of it's also based on the clients. They want the liability for certain. And a lot of the bigger clients now or even requiring $5 million, sometimes $10 million, even if you're not a DOT company.
Yeah, that's more of a liability
Correct.
thing, not so much from protecting your asset. That's kind of on you. But yeah, liability wise, absolutely. And if I'm an operator that has no choice but to carry a $5 million, then I'm letting everybody in my market know that I got $5 million and my competitor doesn't.
Right. So I think that's kind of a personal business decision. If I have a $20,000 car and a $1,500 deductible, that'd probably be my barrier to maybe release some of that, depending on what the cost would be. But if it's a $200,000 Gretsch or a motor coach or a $95,000, $100,000 Sprinter, I'm probably going to keep that.
You got to protect that investment.
Absolutely. Second question is from Matt McHugh. What are your thoughts about multiple policies, either by type of business or type of vehicles, etc.?
Awesome question, Matt McHugh of Acres Bridge in Beantown. Underwriters really look down upon carrying multiple policies. Typically, you're talking about 2 different policies. They kind of poo-poo that. And the reason for that is because there is legal precedent where carrier A can get dragged into a claim with carrier B. As asinine as that sounds, it has happened, and you've got a sympathetic jury sitting there. They're going to, an attorney is going to try to get both carriers to have to pay out. You have commingling of entities, commingling of drivers, and so forth. That's going to complicate that as well. So I'm not going to say that it's something that I never do out of philosophy or anything like that. If the shoe fits, if it provides a solution and it makes sense and it's something that we can get away with doing without my being disingenuous or vice versa, then yeah, you can do it.
So I think something that's becoming more and more common, Matt, is what we did at Grand Avenue. And I wasn't smart enough to figure this out at that point in my career. That was Carl. So we had 7 entities. And we had, I think it was GAL LLC, like Grand Avenue Limousine, which was the parent company, right? So then underneath that, we had like Grand Avenue Limo, which were sedans, SUVs, non-DOT vehicles. Then a completely separate company, and this is what was critical, without common ownership, was GA Shuttle. And that's a very important term for you, right?
Absolutely.
Without common ownership was GA Shuttle, and that's where all of our DOT vehicles, our 18 to 20 minibuses, I think we still had a stretch limo that qualified. Our motor coaches went into that. That company had a $5 million liability policy with a $5 million umbrella on top of it at $10 million.
Wow.
GAL, or Grand Avenue Limo, which everything rolled up into the parent company, and that's where Carl and I and everybody else the partners had the common ownership. But that was $1.5 million, to meet Tennessee, the airport, all the local, regs. So you can definitely do that, but it's not like we had Grand Avenue Limo entity with Lancer and GA Shuttle with Philadelphia. And that's where the question's a little bit vague. Both were with the same carrier and the same underwriter, and they knew exactly why we were doing it to mitigate risk and liability. They understood the way that the corporate structure was set up. If we're doing it with any type of black hatness, I'll use that term, right? Then that's where you can get yourself in trouble. And I don't think Matt would ever do that at all. But I think if you want to protect from a liability standpoint, you're actually protecting carrier too in that type of setup, and that's typically okay. Would you agree?
Yeah, man, you're doing a better job than me. You're really drilling down into it.
Should I get in the insurance?
Please don't. You're too good. Yeah, man, that's great. So sometimes you'll establish 2 separate entities because, as Bill mentioned, you've got units that have a higher seating capacity and require the 5 mil limit, whereas you've got the other part of your fleet that does not require the 5 mil limit. And, those premiums are significantly different, usually somewhere between 30 and, it could be 100% different for that matter. You may have the fleet at 5 mil that requires the DOT filing, obviously, but this fleet over here does not require a
Right.
DOT filing. Now, to speak to what you also mentioned, typically you still want to take both of those fleets, both of those separate, unique legal entities to the same carrier. That's becoming
100%.
increasingly common today because of something known as dual entity theory, which I spoke about earlier, where one carrier can be dragged into a claim with another carrier for a policy that has nothing to do with them. When you get into DOT filings, it obligates the carrier to cover all owned vehicles.
Mm-hmm.
So if you've got common ownership between those fleets, it starts to get pretty hairy.
Right.
So,
It's funny because last week I was in Dallas at the MCI Motor Coach Symposium, where we had 20 companies there, kind of educating them. They were either looking to get into the motor coach business, or had recently gotten into it. And talking to Ian, who was the president of MCI, and I brought up this to them. They 5-6 years ago, nobody was doing this. But now as the limousine industry is a disruptor getting into the DOT side of the business, the motor coach side particularly, this is setting up these different entities, but with this non-common ownership with the same carrier is becoming more and more common for the protection of assets.
absolutely.
I think the thing that you have to understand is when we went in, and I'll just share our personal experience, I had been an operator for 3.5 years when I sold to Grand Avenue. We immediately, within 6 months, got into the motor coach side, set up the new entity. It was a new entity. We had no experience of running motor coaches, even though I had just hired Barry Gross, who had like 11 years of, he wasn't part of the ownership. It played maybe a little role. We didn't have a DOT compliance officer at the time that we had to write the insurance. So at the time, I think like our sedans, SUVs, roughly were paying probably $400, $450. Remember, this is years ago. I know a lot of you are paying $600, $700, $800 a month now on insurance. Those motor coaches came in, I'll never forget it, like $1,400 a month. And, we're talking 3.5, 4x over the smaller vehicles, and we were blown away. Once we got through that first full year and we had a DOT compliance officer full-time, we had Barry Gross, we had Sarah Stewart, if you know that name, who was at Wise and Grayline and all that. And we brought in the experience, and we'd gone to 12. That experience and the procedures and policies, everything that Nathan told you in number 3 and number 4 of preparing your broker and that documentation, we actually didn't have an increase in year number 2, which you think you would going from 0 to 12 motor coaches in less than a year, right? But the experience that we brought in and the documentation and the process that we shared is what helped with that.
That's an interesting thing you brought up, to go off on a little bit of a tangent. That growth from 0 to 12.
That's scary.
Year, it's scary for underwriters as well.
That's what I mean.
Yeah. Carriers like Lancer, Northland in particular, I'm dealing with a risk in Nevada right now. I'm going to probably have to move them midterm because they landed 2 large contracts and they need about 4 more sprinters. They started out with 2.
Right.
And they're just adding and adding and adding, and Northland's going, Well, you would think that, Northland would just want the money, but they're scared of the exposure. They're scared of the fact that you're going from operating 2 sprinters, which you've done for 2 years and you're used to doing that, to now all of a sudden you want to have 9 of them. So they're looking like, what kind of safety controls do you have in place? What kind of experience do you have operating a bigger fleet? And, you could say, well, it's just the same thing more times over. It is. But, we've seen this statistically and just from a general overview. Once you get about 3 or 4 cars and you're a one-guy operation, it can get away from you. The oversight can disappear, and hey, maybe you're successful. You're scrambling, trying to take care of business.
It all comes back to quality control.
Quality control. Yeah.
In my case, we went from 0 to 12 motor coaches. That is 12x the exposure for the underwriter. I think we might have been with Northland at that time. I don't recall. But you think about that, you're you're talking about $500,000 pieces of equipment, as well. So what's that? $6 million worth of exposure just on collision, and we're not even talking about the $10 million in liability every time one of those buses, which is probably averaging 75,000 miles to 95,000, 100,000 miles a year over the road, you know, it's exponential.
Yeah, you know, there's some of the misnomers with your relationship with the insurance carrier. It's more like a partnership. You know, insurance carriers, they get their butts kicked. They go out of business. There's more carriers out there than you can imagine. And yes, they go out of business. You know, you give us $2,500 for a down payment on a policy and you can drive off the lot and have $1 million claim that minute. Well, we got your $2,500. You had $1 million claim.
Right.
So carriers are gamblers. They employ science. They employ actuarial underwriting and so forth. But at the end of the day, they're gamblers, and we're gambling on you guys.
Right. So I think that's all really great stuff. That's a great question, Matt. Thank you. We're going to take a really quick 5-minute break, and then Nathan and I will be back. And I'm really excited for what we're talking about. Loss runs. We're going to talk about the ratio, which I think is really important. Yeah. We got a lot of great questions coming down the pipeline. So we'll be right back in just about 4 to 5 minutes.